Let's get started, shall we?
Hi everyone, how are we today? Welcome to our fourth webinar in our free 10-part educational series of the year, Bookkeeping Fundamentals and More for 2020 Vision. The presentation today is about budgeting and the year ahead and how this affects your business. I'm really super excited because budgeting is so important, and it's a perfect time of year getting our budgets ready in time for the new financial year kicking off on the 1st of July.
Fantastic. That's right, Joe. Thank you, everyone, for joining in, and thank you for being part of this fourth webinar in our series for this financial year. And thanks, Joe, for being part of it since the start. This has been really fantastic. It's been a learning curve for both of us with technology, but also it's been so exciting, hasn't it? You know, we're just learning new skills. Yeah. So, guys, this is the fourth of the series. We started off with cash flow. We talked about how exactly to look for how the cash flows in and out of your bank. We then talked about staffing, and it was very appropriate because COVID had just hit and we were just starting to get into that lockdown. Then we talked about BAS, and that was so essential when it came time to applying for the stimulus packages and so forth. And now, rightly so, we're doing budgeting. And why budgeting? We're coming out of the end of this financial year into the next, but more importantly, COVID now is, the situation is not as bad as it was earlier. We've got lowering of restrictions, and also things have changed, haven't they, Joe? If you think about the business environment and
everything's changed. Everyone's mindsets have changed. It's exciting, really. It's the beginning of the future, I guess.
It is, but what a huge difference it's made to most businesses. And it's really destabilized a lot of small businesses. As a bookkeeper and a BAS agent, you know, I've had to deal with several businesses who have had to close down, or businesses just not doing as well, and it's been heartbreaking. But something that I wanted to talk about before we get started is the idea of budgeting. I know that everybody knows that budgeting is important, but a lot of people just shy away from it, Joe.
Well, it's one of those tasks that you think, oh, I'll do that later on. And then you think, well, how important is it? Why is it important? Like, I guess if you don't understand why it's important, then people are just going to keep putting it off because it's something that's not going to affect the here and now. Maybe some businesses it will. It'll affect exactly what you're going to do, what you're going to spend, and it'll dictate how your cash flow is. But people don't understand how important it is to business.
Yeah, and I think that maybe there is no direct correlation. It doesn't seem like there is. For example, you go out and get a customer, they'll pay for that. For that service. So you might be driven towards that. And so the direct correlation isn't there. And then there might be a fear as well that maybe you don't know how to.
Yeah, absolutely.
You don't know where to start. First of all, like you said, you may not realize the importance. You don't know how to. And sometimes it could be that, especially for free-spirited entrepreneurial types, we might think, oh, if I have a budget, it's going to tie me down to something, and I want to have the flexibility to do what I want to, when I want to. So really, a budget is for yourself. It's not to show it to anyone. It doesn't mean that you have to be accountable to every cent of that budget. It's just to guide you, and it's to allow you to see risks that could come up. And these are financial risks, and then allow you to make the decisions that you want to based on the numbers that come out of your analysis, so to speak.
Exactly. And I think you said something very important there. And I picked up on it. It's not set in concrete. You
No.
know, a budget can be a little bit fluid and flexible. You know, you're going to need to adjust it as time goes on. Or if you've set a budget for 1 year and you realize that, well, I've got this big payment that I know annually comes out, I need to actually factor that in for next year because I didn't factor it in for this year. Whoops.
Oops, yeah.
So yeah, it does need to be a little bit flexible, and don't be scared of it because it's not set in concrete and it is for your personal use, for indications of, you know, the guidelines of how you should, you know, work things out and how much money should be coming in and how you can spend it, I guess.
Yeah. So why then do people talk about just budgets only when it has to do with financials? Because budgets are about um, the financial outcomes, but really the decisions that you make and the plans you have are your strategic planning that
Yeah.
then affect those financial outcomes. So let's think about all the different financial statements that, so I'm just going to flip to um, start sharing the screen, guys,
Okay.
for our, what we're planning to do. We're going to talk about our financial statements, and as Joe spoke about, we will talk about how long our budgets should be, what to put in them, what are some of the assumptions that we'll be using, and our lessons learned. And also something different is about our levers that affect the budgets, that affect the financial statements. So Joe,
Okay.
um, so that's going to be what we're going to follow through today.
Great.
And so if I were to take us to the first point, which is our financial statements, we've already spoken about how there are three financial statements that we need to look at, which are our profit and loss statements, our balance sheet, and the cash flow, right? So
Mm-hmm. Yeah.
usually large corporations do something called a three-way budget, where they look at all the three
Okay.
statements. Yeah, they look at all the three
Mm.
statements and they budget for it. Now, you might have heard the word forecast, you heard the word
Yes.
budget, and they're very easily intertwined and interchanged, and
But they're
people
not the
use them.
same?
They are the same. What we're doing
Okay.
is actually we're budgeting our expenses and we're forecasting our revenues.
Ah,
Ah,
so they're part of the same task or
yeah,
um, process. I see.
yeah,
That's interesting.
yeah.
Didn't know
So,
that.
yeah. So, a large corporation will be doing a three-way budget where they'll look at their profit and loss, they will budget that out, they'll look at their balance sheet, and they'll look at their cash flow because all three statements provide different view of the business itself. But
Okay.
yeah, but today we're going to talk about small businesses, startups, small businesses. And we're going to have a couple of assumptions that make it easy. Obviously, you can take budgets and make them really complex, or you can make them actually very simple. So let us take the assumption of a small business owner who started a business, maybe has been running the business for a couple of years, or maybe 1 or 2 years. Um, that's right, that's a couple, 1 or 2 years. And the only thing that they've got in there, let's say it's a service company. All right, you
Okay.
provide a service like you, Joe. You providing a
Yeah.
service. I'm providing a service. A lot of us are. So let's
Mhm.
say that's a service company, and that you don't have the debt that larger companies might have. You might have just
Yeah.
put in a bit of equity of your own to get started,
Mhm.
and for that reason, well, is it really important to look at your balance sheet budgeting? I mean, if you want to go into that depth, you could, but
A bit much. It's a bit intense, really, isn't it? We
it
just
would,
want to be able to do a more simpler budget,
yes.
I would think. Yeah.
So if you want to go the complex route, you can, but let's start off with the more simpler route and just get
Mm,
people accustomed to that. So what I would
super.
say is that, all right, the assumptions that I'm having for this presentation is you don't have lots of liabilities,
No.
that you have, finance agreements and so on, where you have debt payments. Because when you're looking at your cash flow, then you'd be looking at your operating, your investing, and your financing expenses
Okay.
that actually affect the bank balance going in and out. But if you don't
Yes,
have
your cash
finance,
flow.
that's right. When if you don't have financing and you don't have investing, then you don't
Mm.
need to include that. We can just look at our profit and loss budget. Does that make sense?
That makes sense. Yeah, definitely.
Yeah.
All right.
So, but
So, how do we do it?
how do we do it? All right. So the first thing that we get started with is, let's assume that you have, okay, guys, I'm going to be sharing here the um, zero. Let's assume that you have zero.
Excellent.
And zero, I'm looking at a zero demo company. And you're going to say, well, if I'm looking at a
Mhm.
budget, what are the things that I would like to see in the budget? Obviously, I want to see my revenues and my expenses. All right. So quickly to go
Most
through,
definitely.
yeah. So you want to go to your accounting tab there and
Mhm.
look at your profit and loss. There are several other reports that you can look at, but there's two different types of profit and loss. So you just have to pick the right one. And when you do, it will
So,
give
what's the
you,
difference? What's the difference between the two profit and losses? I must say, I look at this every time I open reports in Zero, and I don't know. I know there's a new look one and an old look one. So this is the old look one.
I love
But
the,
what's different?
what's the difference? I'll show you the new look. All right. The new look doesn't have as much information. And
So that's really important, isn't it? You actually need
yes,
more information when you're talking about budgeting.
that's right. And it might just give you a quick overview like this, right?
Yeah,
And it
it's a
doesn't give you,
summary, isn't it?
yeah, just a quick summary to look at, hey, what my bottom number is. And maybe if you're on the fly, if
Mm.
you're on the go, this might be simple enough. You can compare it with one period, or you can do a filter, but really the options are not as, I don't think that they're
They're
as
limited.
good. Yeah, they're a bit limited,
Yes.
and I love my older reports. So what I do is I actually, doggy.
Make it a favorite.
Yeah, I make it a
I've made
favorite.
it a favorite.
I make it a favorite,
Mm.
and so that's the one that I look at.
Yeah.
And by looking at that quite easily, you can have so many different views. Like you can show your um, the periods, you can compare them month by month. You can compare
Mm.
them to the last 8 months, for example. You also remember we spoke about our cash and our accrual basis of how we do our
Yes.
reporting. Um, and we can do that
It's really
here.
important to know. Yes. That's really important, that checkbox, because if you are reporting on a cash basis, and then you have to select that tick box, otherwise it won't be correct.
That's right. That's right. And
Mm.
and also you can have budgets based on your different tracking categories. That might be how you set that up. And we'll go into that later in another webinar about how to do that. But for now, let's say you want to start your budget and you
Yes.
don't know where to get started. I would say let's look at the history that we've had in the past 2 years that we've been running, or the
Yeah.
past couple of months, at least for the last year. Another
Yes.
thing is, and I've been saying this from the start, garbage in, garbage out. Okay.
Absolutely.
So if you
Has to
haven't
be accurate data.
Yeah. So if you haven't done your if you haven't done your entries properly and your record keeping properly, obviously the reports won't be as good. And so you might be in a situation as a small business where you haven't done that. And for that reason, then you'd have to go and dig through maybe your records to come up with, hey, how much did I pay for that electricity? How much did I pay for those costs, etc. All right.
Okay.
So that's the first thing. The Let's now talk about how long should we actually have a budget for.
Well,
So
I would think at least for 12 months at least. You'd
exactly,
need.
Joe. If you're a new startup and you want to get some funding, you would need a 3 to 5 year budget to maybe show them to your investors. You have some
Mm,
projections, etc. But
mm,
really, as a small business, we change so many things are affecting us, and it happens so
mm.
rapidly. So have a 12 to 18 month budget is my
Okay.
recommendation. 12 to 18 months. Have it as a rolling budget, not as a constant budget, which
What's the
means
difference between, yes, thank you.
yeah, which means, so if you have a constant budget, it means at the start of the year you said,
Mhm,
this is what I anticipate, and then you leave it fixed
mhm.
at that. Okay, so larger companies
Aha.
have that fixed, and then they might measure performance based on that. They might give bonuses based on that, for example. But when you're a small business, there's lots of you might introduce a new product because, hey, that's
You
what's
can.
because you can, because you are flexible and you're easy.
And your
Uh,
customers are demanding it,
the
or they're,
customers demand.
they're, they're asking for it. They're saying, do you do this? Well, the question to
Okay,
ask
yes.
yourself is, why don't I do this? So, yes, we do this.
So if that's the case, then that's a different product and a different service that you're offering. So I'm saying, let's
Be flexible and not set it in concrete and have a rolling budget.
exactly, let's have a
Got
rolling
it.
budget. Um, then how do you do your budget? Some people just do every 6 months or every quarter. I say do it
Mm,
monthly. If
okay, monthly.
monthly seems to work best, so you have for each month or in the financial year for the next 12 to 18 months, have a monthly column.
Okay,
Now the next thing is, what do you put in this budget? you know
exactly. Obviously, you put your incoming or the income, what you expect it to be.
Yes, and your expenses. However, you can decide, do I want to um, have my income split up into the different types of products that I offer? Hmm,
Okay, so that's
Um,
more complex, I guess, isn't it?
that is more complex. You might want to
Mm,
have a little bit more control of, hey, if this product takes off, then how will it affect in my year? If a different product takes off, then how will that affect me?
mm,
Um, One product might have a higher cost of goods sold versus another. But for
yes.
services, obviously, you don't have cost of goods, but you might have other costs, like maybe one product needs more staffing than another product.
Or you might have IT software expenses so you can perform that service.
That's right. So you obviously need to have all of those costs. And
Mm,
and as I'll go through later, the levers, some if when you start a particular product and you increase it somehow, then it actually is a lever that affects both the income and the expense side.
oh,
So,
wow.
a different lever could make a large difference or a smaller difference depending on the type of lever it is. All right.
Okay.
So you might think, hey, how do I want to do this? So every business is different, and
Mm.
you've got to go with what's best for you. The second
Yes.
thing to consider is, how detailed do I need to go with my expenses? Do I need to know to the dollar what my electricity bills are? No, it's a budget.
Uh-huh.
It's an approximation. It's supposed to
Mm.
give you um, an idea. On the other
Mm.
hand, if we're looking at staffing, please don't forget to put your super in there. Don't forget to put your work cover. Those things are important and they do add
Very.
up. So
Mm.
some things are
Big time.
important, something not so important.
And you
So
should be more specific with those costs, obviously, because
yeah,
yes, you can have an estimation, but if you're employing people, they're either on a salary or they're on an hourly basis or what have you, but you have probably more of an idea to the specific cost and almost to the cent that you'll be having to pay for them.
exactly,
Mm.
exactly, Joe. The I would like to take I'd like to use an example of a small business that is an NDIS client or
Great.
NDIS service provider. All right. So I'm
Yep.
assuming this is a demo. I'm assuming that this is what we're going to be doing now. A little budget for an NDIS service provider, and
Fantastic.
you might be wondering, why NDIS? Well,
Aha.
aha.
Okay.
Why? Well,
I
I found that in this time of COVID, when a lot of the industries are being affected, certain industries aren't affected as much as others. And NDIS is the National Disability Insurance Scheme. The government
Mhm.
pays for services to be provided to participants. So the government
Mhm.
gives a bucket of funding to participants, and the participants then choose service providers to help them so that they live fruitful lives,
Mhm.
regardless of their disability, right? So
Yes.
we're finding that in the western suburbs, at least, the number of participants has gone up. And it just so happens that my business has also taken a turn, especially around the COVID space, and is providing more services in the NDIS service provider.
So how did you get into that area? I mean, that's fascinating that, you're obviously, there's an obvious increase in demand. As we were saying, you provide services because your customers, new services because your customers start asking for them. And so you head in a different direction. So obviously this has just recently happened to you. So how did you get into the NDIS space?
Well, um, about a year and a half ago, so I'm also a registered NDIS registered plan manager. So
Fantastic.
yeah, but I really didn't think that I'd be offering services towards NDIS service providers. I thought, oh, I'll just be offering services to participants, and I'll be doing
Yes.
their accounts payable for them. That's what an
Mm.
NDIS registered plan manager does. And I got
Mhm.
into that space rather by fluke, and that was about a year and a half ago. And as I've learned more about the requirements there, I realized that, hey, I have a skill set that very few bookkeepers and accountants do, which is they don't understand that market as well as they could. So I do. And because of that, I seem to be getting a few businesses coming to me and asking me, hey, can you help me out with my books? So,
Mm.
so it's actually meant that I have had to be flexible. I've had to
Mhm.
now say, hey, you know what? This is what I was budgeting to have, but now I've had a little change in direction, and therefore, how does that affect my budget, for example? So
Exactly.
before I got started, before COVID rather, my focus was on hospitality, because that was my interest, hospitality, and
And
also in
traffic.
yeah, and tradies and construction. So that was my area. And then when we stopped and all the businesses closed, well, that's not my area anymore. What do I do now? Suddenly I
Mm.
see this opportunity. bang, that's an availability. Hey, I do that. I am
Mm,
actually able to help with. So you or other businesses might realize that, hey, when one door closes, another one could open, and how do you then adjust your budgets? Well, if you have a rolling budget and you keep changing it as you go,
yes.
then you're able to take advantage of possibilities or use that in your planning, so to
Yeah,
speak.
fantastic. So you've essentially been able to pivot your business in this time of crisis and realize an opportunity, and it's a niche market really. Your
It is a
skill
niche
set
market.
is quite specific, and not a lot of bookkeepers have your skill set. And I think this is fantastic. It's another example of how, during times of crisis, small businesses can really achieve great things. It's
Yes.
really exciting. Mm.
Yes, it is, Joe. This is great. Yeah. So the next thing that I want to talk to you about is how exactly to do this budget. All
Yeah.
right. So what I'm suggesting for small business owner is that they do a cash flow forecast using the amount of cash that's in their bank at the start of the period. So I'm just
Mm-hmm.
assuming that this, for demo purposes, this particular
Mm-hmm.
business has this amount of cash in the bank to start
Okay.
with, on the 1st of July. And this business only provides NDIS support services. Okay.
Okay.
And we are, for the sake of simplicity, we're only going to use one product line. Now, we can have several product lines. And you can, if you've already been providing a service, obviously you export your um, profit and loss statement into an Excel spreadsheet, and then you're able to manipulate that spreadsheet using some basic formulas on Excel. I mean, just use Google and that'll be easy for you to pick up on that.
You could probably almost Google a template, couldn't you? A budget
Yes.
cash flow forecast template.
And you know what, guys? I can offer you a template as well.
Well, there you go. You don't have to go anywhere else.
So if you're interested, just reach out and I'll send you a template, and with all the formulas in there, obviously. You've got your income, you've got your expenses. Now, these might be all of your, like, every business is different. You have separate expenses that you want to track. You might, you have rent, you might have cleaning, utilities, telephone, other things. You might be you doing some catering, you might have software expenses, but I've just put a few out there that, you know,
That you might encounter.
that you
Yeah.
might encounter. All right. Now, for the staffing, I've put it up there, and I want to focus a bit on staffing because obviously staffing is the highest cost that you have.
Mm-hmm.
And secondly, because this is a service-based business, it is staffing that is driving. So for
Mm-hmm.
this, that's the driver.
Mm-hmm.
So let's first start off with the assumption that I've made for this particular demo. The assumption is that all these guys provided social and community participation. So when you have, let's say, a a business that's providing. So, what is this, Joe? What is social and community participation in the space of the NDIS? It means taking individual to different activities. All right.
Okay.
So,
Yep.
the government already gives you the cost, the maximum cost that you can charge, so you know how much the cost is going to be for, um, or rather how much income you're going to get for that
Yes. How much is going
particular,
to charge for that service?
yeah, for
Yes.
that service.
Mm.
So let's say, for example, we want to take a particular participant out for a full day on outing.
Mm-hmm.
And so what are we doing here? We're actually looking at the profit margin of each product
Yes.
before we start looking at putting the numbers out. We want to look at how much is this service actually costing? How much
Mm-hmm.
can we charge for the service per
Yeah.
hour, for
Mm.
example? Um, so in this case, the rate is, if you have if you have one caretaker to
Mm-hmm.
three, so that's a ratio of 1 to 3. The
Yeah.
government's saying we'll pay you $24 per hour if you
Okay.
have 3 participants with you and you're going to go for an hour for an outing as
Okay.
a provider. So I take 3 people with me. It's $24. For one
Yeah.
hour, I'll be making 24 times 3. That
Okay.
makes sense?
Per person.
Per
Absolutely.
person.
Yes.
So,
Mm-hmm.
in this situation, I want to take 2 people I want to have 2 caretakers, and I want to take 6 people on a group, because really, isn't it more fun to have lots more people when you go away on an outing? Maybe you want
Of
to go to
course.
the beach. Maybe you want to go to
I'm
the
all
rose
area.
gardens. You want to go on a
Yes.
picnic. You want to go and play have a few activities, outdoor activities. So you're going to go for
Mhm.
6 hours. It's going to
Okay.
cost you this much, or rather, this is how much you're going to receive.
Start. Yes.
So that would be, how much will it be per person? So these are the intricate details that you really need to dig deep. Now, this really needs your attention. You've got to find the right cost. You've got to
Yes.
find the right number of hours. You've got to um, do that. Hello, look at who's here. Oh,
Oh, we've got a
somebody's here.
visitor.
Somebody's little
The joy,
visitor.
the
Okay,
joy of working from home.
the
Oh,
joy.
thank you.
Okay, so why did you come here? I think she has to leave. Bye bye, Sally.
Hi, Sally. Next
Um,
thing is,
yeah, it's because I wasn't paying attention to her, you see.
of course.
Okay.
Mm. Okay, so
So
you've got 6 people
you
for
got
six
six,
hours.
yeah, you got six
Yeah,
people. It's going to basically bring
that's
in,
good income.
yeah, bring in that much income.
That's great.
But it's going to cost you as well. Now you have
Of
to hire
course.
staff to do that. Are you going to be
Yes.
the staff member? You can't say it's for free, all right?
No. You
No,
have to pay yourself. You value your own time. Yes.
exactly. And it's going to cost you 2 staff members to do this,
Mhm.
because in order to get your $800, you've got to pay for your staff for those six
Yes.
hours. But in fact, you might have to pay them for 7 hours, not 6 hours, because, pick up, drop off. You can't,
Yes, of course.
maybe you need to organize something. Well,
Mm-hmm.
how much is it going to cost you per hour? So these
Mm-hmm.
might be you rates, you know?
Yes. Mm.
So per worker, how many workers? How much is it going to cost? So what you thought you're going to get, what are you really getting? What is your margins here?
And that's
Okay.
actually pretty good for a day's work, $304 or $305 almost. That's
Mhm.
great.
That is great.
I'm in the wrong business.
But however, Joe, you're not taking into account all of the expense in organizing, finding the
No,
places,
true.
advertising, all of that.
Mm.
You haven't taken that into account. Now, that is why you can't just stop here and you go, you know what? I'm going to make $304 every time I take someone out. Away I go. Now, that would be rather short sighted, because you're
Yes,
not running it as a business. You're looking at one single item. Okay.
that's right. There are a lot of other hidden costs, I guess you would call them, wouldn't you?
They're
Yeah.
operating costs, Joe,
Yeah.
because this might be just for the income to come in, and the expense
Mm.
is purely for the staffing. That is,
Mm.
in this particular case, that is the cost of their goods, because you have to
Yes.
take that person and use them to deliver that cost. But then this is a direct cost for this particular organization, but you have
Mm-hmm.
operating costs. Um, it might have taken you 3 hours to organize that event. It might
Yeah.
have meant that you've put in, ads, for example.
Mm. They cost.
Yeah, they all
So
cost.
already you've got 3 hours at $40 plus however much the ads cost. That could be $50 in total profit. for the
Now,
day.
yeah, so can we keep all these things in our head? No. So that's
Right.
why we got to put it down on paper. So
Okay.
you might go away for the whole weekend, for
Okay.
example, and you have different costings for that. So, Joe, I've got an example here where a whole weekend can bring in, based on the numbers that I put through, can
Yep.
bring in 8,000. And
Great.
my expenses could be 6,000. But who
Mm.
wants to work for $40 on a Saturday? Mm,
Yes,
you
exactly. You
know,
have to. Mm,
do they really
that's,
work for $40? If I make that 50, how is that changing my numbers? If I make
no.
that 55, how is that changing my numbers? Am I
Mm,
really able to get a worker for $30? I don't think so. During the week, even 40.
mm,
You
mm.
know,
Yes, absolutely.
um, and this
That
month,
doesn't take into account any of the other expenses that you were talking about before. I mean, there's food, petrol, a whole lot of things there that aren't even considered. So that really does make big changes, doesn't it?
yeah, it
Mm.
does. So, um, the what I would suggest when you're doing your costings and your assumptions, I'm calling them. These are your assumptions that go into your projection.
Mm-hmm.
Let us look at let us look at how we can put it in such a way that we can calculate on a different spreadsheet and then make changes to the main spreadsheet by using links or something like that. So you have the flexibility is what I'm trying to show you.
Yeah, absolutely.
Okay.
Absolutely. Great.
So that might be, and there might be other things that you do. So let's say this particular provider is not just doing daytime activities, but they might even be doing an activity of um, maybe cleaning someone's house, or caretaking for the individual, or helping them with the cooking, or whatever that might be. So this is for this particular client. For you, for example, it might be, hey, I provide a phone service, I do a CRM service, I do social media. All of them are different products,
Yeah.
and you need to look at each product and go, well, what are my assumptions? How much is it going to cost me um, per, let's say, client? How many hours is it going to take versus what can I
Mm-hmm.
charge them? So it might be as simple as saying, hey, for this particular service I charge $80 an hour. That might be a
Mm-hmm.
service. Or you might have a package that says, I charge $380 for a package, and this is the number of people who I'm estimating are going to take that package,
Yeah.
right? And
Okay.
based on that, you will then decide which months you're going to get what on. Now, remember, your income is always forecasted.
Mm-hmm.
So if your income is forecasted, you're putting your assumptions in these forecasts,
Yes,
right?
definitely.
So I'm always saying, put down your notes. Like, okay, I'm assuming I'm going to have one outing in April, one in June, one in October. That is a
Mm-hmm.
3-day outing. I'm going to have one in February and one in August, which is just for the weekend.
Mm-hmm.
And so if I have that, then correspondingly, my staff is going to change. So
Yes.
I might have one staff member who I pay, to do some work on a regular basis, to do the admin, and then I have the other one to do something else. So remember when we did our little social participation here, we didn't do the admin staff, and then
No.
now we're going to have to put in admin.
Mm-hmm.
So when we do things like that, then we also want to consider, when are we going to get paid? Do we get paid in the same month that we go um, on the outing? Do we get paid the next month? Are we allowing for the timing of the cash flow? Remember, this is using the budget of profit and loss, but having its timing critical to your assumptions. All
Yes,
right.
absolutely.
So you're going to have an assumptions tab, and you're going to write down all your assumptions like, um, do I need rental space or do I not need a
Mm.
rental space? And based on that, you're going to fill out all of your figures. All right.
Yes, makes sense.
Then, sorry, I just removed some things. Then based on your expenses, you can come down to your profit and loss, and you just see, hey, you know what, that
Mm.
month I'm actually not doing well at all because I didn't have an activity. I'm just starting off and I'm getting paid from the previous month's work. I did
Yeah,
something in July, the nothing came, so I'm expecting this
yeah,
much income in July. I did some work in June, the money comes in July. I'm doing work in July, the money's coming in August, right?
yes,
So I'm doing an outing here, but the money's coming in here. So
yes.
in that case, how's my balance, my cash balance at the end of the month? I still have some
Mm.
money, and of course, I haven't put any of those in. So you've got to put
No,
those in too. So let's look. This is just the bare bones. We're not going into the detail. Now,
no.
to sit down with someone's budget would be to say, well, let's look at all of your previous expenses. How did
Mm.
you how did you allocate them in your accounting software, if you had an
Mm.
accounting software? If you don't have one, let's think of all the possible costs that you have, all your
Mm.
insurance costs and so forth. If you're driving around, there's your petrol costs, your car repairs, maintenance, so on. So you go into
Mm.
those details and you look at those and you think, when is something due? Like your rego might be due once a year, but when, in which month? And then you're going to put that in that month. So you're
Mm.
going to be able to have the flexibility then to look at those budgets and then figure out that at the end of the year, that maybe this particular service has $10,000 worth of profit, just as an
Yeah,
example. As an
great.
example, without all those expenses, obviously, this is
We're just
just a,
we're just assuming they're in there. Yes.
yeah, we're going to fill them out, and it'll
Yeah.
tell us which months we're actually making money and which
Yeah.
months we are hardly making any. And that might then allow you to look at other things like, let's talk about that, Joe. If I
Yeah.
if I can see that I've got a loss in one month,
Mm.
what what would I be looking at? I'd be looking at, what are my expenses for that month? What
That's
did I
right.
put down? What are my revenues, and how can I maybe
Increase.
increase my revenues? Can I call
Mm.
people? Remember, we spoke about this. Can we call
Yes.
people and ask them to get the money in earlier? Can we delay? So those are some of the things that we'd be doing. And as we look through our doing the budget, you learn so many things about your business. You learn where the
Mm.
problems are. You learn, if yeah, for the first couple of months, maybe you forget about some of the costs, and then if you do a
Mm.
rolling budget and you review it regularly, you would
Mm.
then be able to identify, hey, you know what, I forgot this last time, let me fix it now.
The other thing that you might learn is what, for in this instance, say what outings are more profitable. You might find that
Great.
going away on a 3 or a 4 day trip might not be as profitable as a 1 day trip.
Yeah.
You'll be able to see that from the profit at the end of the month. If you've made a profit in 1 month and you haven't done any 4 nighters, you've only done single trips, then then that's probably where you should be focusing your services
Mm-hmm.
on.
Mm-hmm.
Sure, do the odd one for an extended stay, but if it's more profitable to do 1 day trips, then throw more in each month. Then you can look at the months where it's not going to be profitable and say, well, we need to do 2 more 1 day trips in that month.
That's
That's
right.
that's the way you can make decisions about, you know, what you can provide, what services you can provide, and oh, I need to up those services in that month.
Mm-hmm.
And what
Mm-hmm.
kind of services am I going to deliver in that month? Hmm.
And also, hey, because I've decided on taking this service, I'm going to advertise in this way. I'm going to do my social media geared towards that. I might, you know, find that there is more of a need suddenly for maybe a group activity in, let's say I'm going to be doing cooking, for example. Rather than going
Yep.
away, I might have it in a rental space. So if I do have it in the rental space, it's going to cost me this much. However, it might be easier because maybe my staff members don't want to travel or find
Yeah.
it easier to just come to the location. Who knows? There might be several things that you could think of specific to your business. So
Yes.
I just want to then also
So,
point out. Mhm.
sorry, I was just going to say, so by budgeting and forecasting, you can make service delivery decisions about your business. You can decide what you want to deliver to your clients. It gives you data to back up your decisions. And you can make those informed decisions then.
Exactly,
Mm.
exactly. And so what we are doing right now is we're looking at our levers. We're looking at our
Okay.
levers because we're going, all right, if I market, if I have so many ads and I market to um, this particular product, then it's actually going to lever my costs and lever and then affect my bottom line. So what is it that I want? I want to increase volume, maybe.
Yes.
How many
Yeah.
do I want to do?
Mm-hmm.
So do I want to increase the number of products? Or do I
Mm-hmm.
increase the volume of the one
Product.
product? See what I mean?
Yes.
Yeah,
See, I never knew what levers were, and here I was saying, well, this is this, you know, and I was talking about levers. There you go. You
exactly.
learn something every day.
That's right. And the thing about a lever, I guess, is that you can make a small change and it can
Mm.
give a big result.
Absolutely. Yeah, and that's
So
exciting.
yeah, and what changes do we need to make? Well, we won't know unless we dig deep and look. So things that are important are your profit margins per unit of a particular product. Other things that are
Mm.
important are what's your break-even cost? That's very
Yes.
important. You need to know if you've got maybe rental space, you need to know how much you need to make in order to just break even. What
Yes.
yeah, so that's the thing. So then we've got other levers like pricing, for example, is another lever.
Mm-hmm.
How does pricing then affect how much you're going to make? It has a
Well,
huge difference.
it does.
In this particular case with the NDIS, the government gives you the pricing, but in most other cases, you have to come up with your own pricing. You might go with what
Right.
the market is offering, or you
Mm.
might undercut the market, or you might say, hey, you know what, my service is so good, that's what I'm going to charge. And if I
Mm.
have a high price, maybe you won't have a high volume. Or you
Well, that's
might say,
right.
I'll reduce my price and I'll work on volume.
See, I would prefer to, rather than give a discount or reduce my price, I would prefer to give more. So, for example, in a gym situation, somebody buys a pack of 10 sessions.
Mhm.
Instead of giving them a discount, I'd say, I'm going to add an extra 5 sessions onto your pack because it's end of financial year or whatever it
Yeah,
might be,
yeah,
or COVID-19 reopening special. So,
yeah.
don't devalue your own brand by discounting all the time. I think
That's
that's
right.
something I learned really, really early in business. But yeah, that in itself is a lever.
Yes. And
Wow.
and it's a decision that you decide to make based on your business strategy and
Correct.
based on the direction you want to take for your business. Um, and okay, so pricing is a
Great.
lever, volumes are levers. Um, what about staffing? The way you
That's got to
utilize
be a lever.
staff. Oh yeah,
Yes.
the way you utilize your staff. You want to look at, what staffing mix is good, which staff to use for what.
Yes.
All those decisions then will affect that bottom line. Um,
And affect your budget.
yes, will affect your
Mm.
budget. How about, do I need a girl Friday too who does, most of the work while I
Mm.
concentrate the higher skilled staff in one area and then get someone else to do the photocopying, the admin.
Yes.
Maybe. Can I then afford a virtual assistant? Can I
Yes.
afford a bookkeeper to do those tasks that I was doing before, because then I can use my time here. Talking
Yes.
about time, also um underestimate the amount of time that you put into the business, and always try to cost that in to your budgets. Initially, when you start off with, we don't think that um, we need to get
Most people
paid,
don't take it.
perhaps.
That's
Sorry.
right. Most people don't. Most
Yeah.
most people don't take a wage. I think it's one of the most important things to do. You've got
Yeah.
to take a wage. You have to value your time, whether it just be a token amount or an
Yes.
actual wage, depending on what you're starting off with and what funds you've put into the business to start. But you're absolutely right. You have to value your time.
You have to value your time. You also need to understand that you've only got that much time in the day. So
Yeah.
don't spread yourself too thin and say, hey, you know what? I'm going to be the one out there with those participants working the 7 hours. Then I'm going to do another 7 hours with these other participants. No, you can't.
And then I'm going to do the admin at night, and then I'm not going to sleep. And we are all guilty of that, I
Yes.
guarantee you.
And likewise, you can't, you've got to think about your rostering as well. All of those things then come in to, they all tie into your budgets, don't they?
Yes, absolutely. Mm.
So those are levers, and that's budgets for you. And
Fantastic.
I hope, Joe, that I know you've always said to me, hey, Sarah, whenever I do these sessions with you, I learn a lot. Well, I certainly hope that you've learned something.
I learned about levers. I mean, I knew the actual concept. Well, no, I could understand what a lever was, but I didn't know it had a name. So there you
Yeah.
go. I've learned all about levers.
And also about three-way budgets. You didn't know about the three-way budgets.
No, and yet I know I have contributed in past roles at companies. I've had to contribute to budgets and what have you, but I didn't realise that they were three-way budgets. I knew they were quite complex, but
Yeah.
fascinating, absolutely fascinating. Thank you
Thank you.
so much.
You're
I learn
welcome.
so much every time, and we have so much fun doing this. I really look forward to it every month.
Thank you. Next month we will be talking about how to wrap up and close up your financial year, because that's what we will be doing.
Absolutely. Perfect
And
timing.
it's perfect timing, but not only that, guys, when you wrap up your financial year, you can use that information to do your budgets and to keep working on them. So it's a live document. I encourage you to get started, and I encourage you, if you haven't got one already, to have a personal budget for yourself as well. So consider
Mm.
yourself like a small business, having income and having expenses. And especially as a small business owner, your income comes from your business. So you need to make sure that you have a break even how much does it cost you to live, and make sure that
Yeah.
money comes from somewhere, because the last thing you want to do is run out of cash, and then everybody suffers.
That's not pretty.
No, not pretty at all.
Not
So
pretty at all.
so good luck, guys, with the start of reduction in the restrictions, and wishing all of you guys good new happy financial new year ending
Yeah.
in about a month.
Well, we,
Yeah,
yeah.
4 weeks. So we'll be having the next webinar before the end, in June, towards
Mhm.
the end of June. So keep an eye out for that.
Can't wait, Sarah. Looking forward to it. I'm going to learn all about closing off the old financial year and opening a new one.
Thank you. Okay, cheers. Take care, everyone.
Bye.
Bye.